Hi, Tamal. Thanks for coming on the show.
Thanks. It's too cold in Delhi since.
Yeah, it's not changed. Now, your column was a bit warmer this side. In your column this week, you highlight 2023 will be the year of deposits. Given that
Yep.
credit growth has already started tapering off, will the deposit war continue for long?
Yes, it is. I mean, how long? That's the question. But as we speak, this week, in the beginning of the week, the series of banks have raised their rates. Even foreign banks, even though you are saying that credit growth is coming down, but still deposit needs to go, because you need to also keep in mind. Very often we forget, 100 rupee deposit you are getting. You are not been able to use the 100 rupee for lending. But SLR and CRR take away 22.5 rupees. So for every 100 rupees you raise, 77.2 rupees actually you can lend. That you have to keep in mind. And practically it's more, because CRR, yes, you hit to keep it. You don't keep more with the Reserve Bank of India because you don't earn any interest. But SLR is actually, the systemic SLR is much higher than what is the regulatory requirement. So the gap still remains. And do you have enough capital to bridge that gap? Definitely not. So deposit war will continue, and something which we have not seen in the past.
When you talk about capital, my mind goes off to government securities. Can't the banks use them to aid credit growth, or would that be a problematic approach?
No, theoretically, yes. If you have too much money in your kitty, which is more than the regulatory requirement, you can liquidate. But can you do that? I mean, we'll get to know. 1st February is the budget. What will be the government borrowing program? If you see the gross borrowing, people are talking about higher than the current year, and the banks are the primary takers of this government bonds. So theoretically, yes, but practically, no.
Now, one question that pops up in my mind when we talk about deposit wars is the fate of small finance banks and payment banks. These haven't in any case been too successful. Does a deposit war hurt them more?
Yeah, it's a very pointed question, I would say. See, payments bank, let's accept it's a failure. RBI also does not say openly, but RBI knows that payment bank. Let's not talk about payment bank. SFBs, yes. Now, SFB's business model, if you see, on the asset side, they have a different set of customers. On the liabilities, they have the same customers, similar customers, which the normal commercial banks target. Basically, the HNIs and others, for money, they target the same. And historically, since this SFBs had come up in 2016, they have been offering 1%, 1.5 percentage point more than the public sector and the private banks to attract depositors. Okay, they can afford to do that because earnings on their loans also higher. So the so-called NIM, net asset margin, is also far higher because they are into unsecured loan, so on and so forth. Now, the two things are changing. Post-COVID, they are more into secured loan. Okay, they are getting out of this so-called microfinance, etc., and getting into secured loan, which means their earnings on their loans are coming down, and so that will impact their NIM. At the same time, they, in order to be competitive and still get money from the same pool of, as I said, they are not turning the unsecured creditor into savers. They are reaching out to urbanites, HNIs, salaried people for the extra money, offering another 100 basis point or 150 or 200 basis point. They are eating into the normal banks clientele. They need to raise their deposit rates also. But I think now the last 6 years or so, they have been able to convince their scheduled commercial bank. They will not fail. RBI will not allow them to fail, any of them. And your deposits are safe. Your deposits also carry the up to 5 lakh insurance guarantee, so on and so forth. So that handicap they do not carry anymore, but the competition will be fierce.
RBI is trying to achieve this parity for banks and NBFCs. What is your take on this?
No, you are talking about in terms of regulations, right? it's not only banks and NBFCs, even UCBs also, the urban cooperative banks also. So what is happening now? There's a radical change in the Reserve Bank of India's approach to supervision. I'm not getting into all the details, but it's become very proactive, not very outcome based. Now it wants to attack so earlier the approach was they used to trade the banks and NBFCs and UCBs in silos. Regulations are very different. Even within the banks, there are big banks or large banks, small banks, different. But now there's a uniform approach. Banks in private, they're talking about micromanagement by Reserve Bank of India. But RBI is defending it. No, it's not micromanagement. It's for systemic stability. We want your balance sheet to be believable. That's good for you. You can sleep well at night. As a regulator, I can go to bed without any kind of tension.
Because we're talking about banks cleaning their balance sheet and RBI aiding them in it, let's talk about the issue of Yes Bank, 81 bonds, and the Bombay High Court judgment saying you can't write them off. What do you make of this and what are its implications?
Well, 81 bond is an instrument which under Basel III, it's a sort of proxy capital, is a part of the tier 1 capital, right? So you shore up your capital by raising this bond. It's sort of perpetual in nature, but the issuer can call it back. But very important part is very unsecured. And because of that, typically the interest rate offered is higher. Now, typically what we have seen from the investor's point of view and the depositor's point of view is this: Reserve Bank of India does not allow anything to fail, so my money is safe there. But here we found that in case of Reserve Bank of India, in case of Yes Bank, during the restructuring in 2020, the AT&T bonds, thousands of crore which were issued in 2016 and 17, they were written off. Similar thing happened with the Lakshmi Vilas Bank, which got taken over by TBS Bank. And that created a massive fear psychosis among the investment community that Yes Bank bonds were missold. It was sold to individuals, HNIs, which should not have been. Now, it gives I think new chapters is opens up. The uncertainty, etc., remains.
Thanks a lot for your time. It was great talking to you. We hope to talk to you again next week. Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.